think, Seungha, maybe you can speak to this because Ning Tong, for those of you that don't know in the room, but CreditEase was really the first alternative lender in China. Ning Tong built a absolutely fantastic company. And now they were really the leader in migration to wealth management, which is something we haven't seen really in the US from Lending Club and others. And maybe it would be great for you to address the differences in that market and how China is actually, in some regards, when it comes to alternative lending, is actually leading the world.
Mm-hmm. Yeah, I think that's a great point, Melissa. I think, Melissa, you know, your experience with Lufax, obviously there are different business models within Chinese peer-to-peer marketplace. So we started as a peer-to-peer market operator in the country about 11 years ago. Today, we are also among the largest independent asset management firm, private wealth management firm in China. And so the business model basically evolved from just serving for the mass affluent population for the alternative lending space through peer-to-peer marketplace. And then now we are setting up our in-house sort of fund vehicles, accessing different type of asset classes. So by hiring people who are, have more global background within private equity, real estate, hedge funds, now we set up our own fund of funds background platforms within wealth management. So I think the model is actually a little unique in a sense that it's starting from just peer-to-peer marketplace, now wealth management. We have different businesses, including robo-advisory, and the private equity investment, direct fintech vehicles within the firms. And so I think it can be a sort of a convergence of different models into one bucket.
Yes. Just to put it in perspective, many of you here heard from Mike Cagney earlier today, and they were talking about the size of what they built, and some of you may know the Lending Club, but to put it in perspective, Lufax, which Seungha mentioned, which will go public next year, they've done 700 billion US of loans in 6 years, and they did 1.6 billion of revenue. So in China, companies have the ability to scale beyond really what's comprehensible in the US. And I think that's what makes it a unique market. Mm-hmm. But Jon, getting back to some of the sectors that you're interested in, you talked a little bit about healthcare, right? And that plays into the growing middle class, and I'd love to get your perspective on that.
And that's mainly what drove our excitement about the thesis. And we saw maybe 3 different players that were doing this, but it was very much a copy to, in this case, copy to China model, in that they have people on the ground in Boston, San Diego, and they're porting technologies and devices and pharma into China to basically take advantage of that growing middle class that wants more healthcare. And while you have two factors that play into that, one is the government is really beginning to get behind it with more governmental support and dollars to help expand that undercare that's currently in existence. And secondly, the rising middle class. I read recently that household incomes will expand by $5 trillion in China by 2030, which right now one major area of that is going to be healthcare as well.
So with that said, I mean, do any of you think there's going to be a pullback in China? Maybe Janet, we could start with you and then move down.
In the overall economy, or yes, just in general? I mean, I think there's certainly the traditional businesses, particularly what we've been talking about, what's happening with retail here in the U.S. I think that's only accentuated in China of in terms of the migration from offline to online. And just to add to that point, the other sector that I think is really emerging as a trend in China is the aging population, aging demographics, which is only accentuated by the one-child policy that China has had for since I was born. And that has so many different implications, for example, with more than just healthcare, which is quite obvious. As one gets older, you need to be entertained. So I think content and entertainment industry is incredibly exciting, as well as companionship. With one-child policy, you've got all of these pairs of grandparents, and the children don't have enough capacity to fulfill the need of the elderly for companionship. So we're seeing a rise in pets. That when I was living in China in the 70s and 80s, that's unheard of. But the ownership of pets, both with the rising middle class and the aging population. So anything that you can think of, pet food, So these are just a couple of examples that I think China has tremendous opportunities for new players, sort of beyond just the BATs.
Yeah. Well, I think one of the issues on the aging population and the one-child policy is, does this next generation of millennials even have the desire to take care of their parents in the same way from a traditional standpoint? And that's raising a lot of questions of, first of all, can China get rich before it gets old? Number one. Number two is, what do you do with millennials who have had, very different lives than their parents have had? And they're not necessarily going to be around to take care of them in the same way. I think, Alan, what do you see? Do you expect a pullback?
Yeah, I think when thinking about pullback, it's easy to say and look at the capital outflow right now. Venture funds that are getting formed in China. Interestingly, a few of our portfolio companies here are getting multiple term sheets from venture funds that were sponsored by provinces. And they're very, very specific. These are inland provinces that are sponsoring IC funds. So they want to target and get expertise in ICs over here. So if we put aside the topics of trade barriers and what happens, I think what's going to be very interesting to think about in terms of whether there'll be a pullback is if you think about the politically, whether it's stable enough, and probably is if you look at overall just the consolidation of power in terms of the control by the government. In fact, people are getting wealthier, getting healthier, generally, aside from the sort of environmental issues, then the government is probably going to stay in power. Then the next question is, if they're deploying so much capital, then I think for the next few years, the question will be about what will be the returns that will be earned on those capital. And if some of the deals don't turn out well, or if the real estate deals overseas don't turn out well, then the question will be, how do you work through these distressed assets? And China generally has a very unique way, as we've seen with the 4 AMCs, to work through distressed assets. But with that said, you should look back and say, well, some of the best distressed firms in China are no longer there anymore because distress was never an interesting enough area for them to survive on the long run. So when the next cycle comes, how will you benefit if there's a pullback?
Yeah. And Jon, what's your view on that?
I think, I guess by pullback being just slower growth, yes, and what ripple effect may that have? Excuse me. We have positioned ourselves somewhat for that with special situations as one strategy. We have a layered approach within Asia with a Pan-Asian special situations manager that can take advantage of episodic and country by country dislocations that may be there. The other thing is, we're beginning to look at secondaries, dedicated secondaries manager that can especially take European investors that have invested into Asian managers that want liquidity for various reasons. And so we're taking advantage of that pullback that may exist and the people, different investors' desire for liquidity out of the market.
And Seungha, what's the view of CreditEase on a pullback? Because you really are sort of in there every day with the growing middle class.
Yeah, so we have about 120,000 active investor base in China. Many of them, large majority of them are founders, entrepreneurs, management team of many businesses across different sectors. We can see there are a lot of pains being felt across retails and some of the manufacturing traditional industries because of rising labor costs, et cetera. And so those sectors are, I think, far is being challenged for sure. On the other side, when it comes to more tech-enabled sectors, for instance, I guess to put that into context, China right now, in terms of urbanization, is about 55, 57%. versus 70% plus in the US and Japan. But if you take a look at number of cities, large cities, there are over 102, 3 cities with over 1 million population in China. There are over, I think last time I counted, 14 cities with over 5 million population. Versus in the US, there are only 10 cities with 1 million population. What that means is there's a lot of, the urbanization trend continue actually encouraged by government to some extent. There's a huge mobile penetration that's picking up a lot. And so that actually allows a lot of tech companies being able to serve these local urban population that are looking for consumer upgrade goods, healthcare, education sector. So those sectors we see still strong growth potential as well. So.
Well, one indicator that we've always found is the load factor on Cathay Pacific. It was pretty clear in 2008 during the global financial crisis that the flights to and from China started to be a lot more empty. And then that only lasted for about 3 months and the load factors went up. And then 6 months later, you could see everybody was back to normal. So we have not seen a decline in load factors, even though Cathay has had some issues on hedging on oil. But load factors still seem to be quite strong. But